Hello everybody, Houston here. I hope you guys are doing well, having a great day or a great night. Before jumping into the charts, don't forget to smash the like button, share with your friends and subscribe as well. And let's do it. So this is going to be our last update on 2020. And we are going to cover the dollar, the correlation with Dow Jones stocks, and then we will jump into crypto for Bitcoin, Ethereum, and XRP. And so let's start here with the dollar because there's a lot of things here to talk. And so let's start with the beginning, right? Shall we? Just a second. Okay. So I want to show you. So let's start measuring the thing, right? From left to right. Let's do this two-way. Just a second. Let me fix this. No, thank you. Yes. So here, just a second. So I'm going to do the thing here, and then I will explain what I'm doing and why, and you guys will have a better understanding. So what I'm trying to measure here is this guy. Okay, forget everything else. It's just this guy. So it is crystal clear. Okay, so we have a high, a new low, lower high, new low, and here we are waiting at the crossroads. But so we have a downtrend in the dollar. It doesn't mean it is bad. We already talked about this. There is a inverted correlation out there. So we have kings. So for example, the dollar is a king, Dow Jones is another king. For example, we can consider somewhat the euro as a king as well. Why? Around 50 to 55% of the euro basket is made by US dollars. Okay, so when it comes down to the crypto market, we can consider Bitcoin as the king of the crypto market, at least for now. But just for you guys to have an idea, so what happens here is we have bull markets everywhere, okay, and then we have the dollar in a bear market. So when everything else, just a second folks, so when everything else is going down, the dollar is going up, and when the dollar is going down, everything else is going up. So it's like, imagine a wallet, okay? So when things are going up, people go to the wallet, pick their money and put into the markets. And when things are bad, there is fear or uncertainty, whatever, it's like that money leaves the market and go back to the wallet. That's the correlation. So this is a fact. We can see this in the charts, in multiple charts. This is not my opinion. You can do your research and you're going to find the same thing as well. So this said, so this is around 80%. So 80% attack, a retraction, so that's aggressive. And now we are going to measure the next one, because the next one is not set, so it's not complete, it's still in work. So we are going to only have an idea of what is happening. Remember, making any call on things that are not clear, things that are not there, that is still developing, it's not the best way, or it's not wise, not a wise thing to do. So again, let's make a comparison here, a quick one, because there are people, some of them share these charts with me, but the thing is, they are so bearish on the dollar. They hope day after day the dollar collapse, the dollar crash, and this is it. But what after? Well, what's the big deal? Because if the dollar crash, a lot of other currencies are going to crash as well, which means a lot of other economies are going to crash, to collapse. And so the question is, what's the deal about asking, wishing a dollar collapse? So some people, they want things that they don't understand. And again, we have people calling for a dollar collapse since 2004, 2005, non-stop day after day. And in my humble opinion, that's not how it is going to happen. But okay, so let's go back to the chart. Let's take a quick look here. So this is the previous high, right? And this is the low. So we can call this guy here, this structure right here, a bed off the midway. Okay, because there is always joints all over the assets. Nothing goes up forever, nothing goes down forever, nothing goes up in a straight line or goes down in a straight line. So now let's take a look here from the new low to the previous high. To the next high. So we have the low, and here we have the bed off midway, and here we have the next high. So let me make this clear, just a second. And again, some people, they look at symmetry here on the dollar. So they make draws, they draw lines, they draw patterns all over, but there is no symmetry, which means you can find anything, whatever you are looking for, you are going to find, because you will draw lines and you will adjust your lines and make things fit. And then you can call the thing that you want. So this is called the power of suggestion. This is very dangerous, it's tricky, and it should not be, it should be leave outside when we are talking about the charts, right? So now let's do the same thing based, oh, and remember this is a 80% attack, retrace. And now let's do the same thing for the next one, the previous high, the next low, and here we have, oh sorry, we can do this back and forth all the ways. So here we have a midway, right, clear one. So this was an inverted head and shoulders that failed. I've been talking about this, oh sorry, not about this one. We have a possible inverted head and shoulders here as well. So this is the monthly chart. For a second I thought this was the daily, sorry. So the high, a failed inverted head and shoulders, battle of midway, and then the low. Now let's go for the next one. So since we don't have a lower high yet, or a set lower high, that's interesting because people are calling this a beginning of a crash, but they never do it on such levels. That's interesting. It's just like buy high, sell low, you know. But so since we don't have another pivot here, we can make the anchor for Fibonacci. So I'm going to remove this guy so it doesn't make a mess. And now let's start again. So what we have is this. We have the low. So this is a clear, very clear so far. It is not decided, it's not ready. Battle of midway. So in other words, this is so it has the DNA of a bullish continuation pattern, and most of times bullish patterns broke bullish, they don't break bearish. But then maybe those folks that are always bearish, They will say, well, this is not a big deal, we're going to collapse, this is it, because you know it's bearish. And so how we can have a bull break in a downtrend? So let's take a look here. So remember, this is the previous high. And this is our low. So as we can see here, we are just in the midway since from one point to the other. Crystal clear, right? Excuse me, guys. So the yellow lines is the tool that I developed. Some of you guys are already familiar with it. And another thing, we are still, not we, the dollar. So the dollar is still trading above 89. The dollar is still making higher lows above 89. So since below, so this is the low, higher low, higher low, higher low. And right here, we're going to jump into it. We are having a strong bullish reaction right now. But yeah, so, and then the question, how we can have a bull break in a bear market? A bull break from here, let's say something like this. It is not going to change the macro trend or the macro picture, because after a major bull break, we still end up with what? A lower high. Lower highs, higher lows. That's it, folks. So these people, so this is not a bad thing, okay? I'm not trying to call anyone out. No, that's not about this. So it's because most of these people, they're not familiar with patterns and outcomes, structures, how to measure. And so when we see, so we, and also we in the Champions Club, when we look at such things, we understand the possible, a potential outcome of such structures, such moves, such continuation patterns, fundamentals, Elliott waves theory, etc. Fibonacci, contractions, extensions, and etc. But those people know. They're always looking for, oh, this is it now, it's going to break, and then the thing goes up. Oh, no, now it's going to break, and then it goes up. Oh, now it's going to break. So, now let's take a closer look. For a better understanding, right? And again, folks, this is not about support and resistance, because a lot of people will say, oh, you know, but this line is behaving like a support and resistance. No, it is not. And the matter of fact is this. Down below, far away from it. Down below, far away. Down below, up, below, up, below, and far away. And so here we have a similar behavior. The dollar stayed below for quite a while, developed a bullish structure pattern, and then bull break. There is a deviation, and then we go back into that level. So a question that, and a thing that they never talk about, support and resistance, folks, they never acknowledge such a thing. The question is, why we go back to such levels? Okay, so as you guys can see here, it's like a magnetic level. Things tend to happen around such levels. Okay, so for the next one, for example, so let's say the dollar goes, just a second. Okay, So let's say this scenario plays out, the dollar goes up and then end up with a lower high, and then bang. We are going to retest, not retest, to go back to pay a visit to this level again. Why? Because there is a lot of value, there is a lot of significance around such levels, and those levels are perpetual. They never change, never ever. So yeah, so and then we can expect a new low, right? And so as you guys can see, it's far away from 55. But yeah, it can happen. It can go into 55, whatever. We are going to know this soon, but not today. And now, okay. So another thing that they never talk about this is this. So they are always looking to flat levels, their support and resistance levels. But so let's say we ping here and then we bounce. They are going to draw a square from one side to the other and call this a support. But if we go down back to it, what they are going to do? They're going to buy because it's a support level. But what they don't know, or what they don't talk about, they never acknowledge, is that flat structures are not bullish, are bearish. So by a matter of fact, they help to develop bearish structures. So they try to play a bullish move, but end up doing what? Participating in bearish continuation. So why they don't talk about this? Maybe because they don't know, they don't have any idea. They are clueless. Okay, so if you want, because I've been in this road before, so support and resistance, why we should use it, and then I find out it is gross, it's not accurate. You can use this to trade to make money. Okay, so yeah, so if you want to learn to upgrade your skills, to become a better technical analyst, or a better investor, or a better trader, forget support and resistance stuff. And also, there is the guys who use moving averages as support and resistance. This is the worst thing ever. The worst. A complete joke. And why? If we use, let's say, a 50 days moving average, it is a representation of price in such a range. Okay, so there is a math that are going to measure the high and the low, and then mix those days, and then you're going to find that amazing line with a price. So this is a average representation of price, nothing else. This was used back in the day, long ago, when we didn't have all the tools that we have today. And again, it's a average. It doesn't mean it is for the top of it or down below it, because we know there is always a deviation. Sometimes it's overpriced, sometimes it's oversold, and these conditions are always changing. So the moving average, we always stay in the middle, because it's the average price, or the 50% of price. But thank God. What you guys can see in my charts and in my videos, it's not even 50% of what I developed. Okay, I developed the perpetual charts that long ago people thought this was a joke, that this was like a prank, but it's not. We have perpetual charts. We are using perpetual charts. So we have these tools that invalidate that we don't need it to use all the other tools. That doesn't make sense. So we made things clear, easier to understand, to read, and etc. That's why I can talk about this with property. I'm not guessing, I'm not joking here. I do this for a living. So let's back to it. I try to be fast here because we also have other things to take a look. So this first one here, so this was almost a 90% bullish retrace. So this is not bearish, this is a, so we have the fall and then a strong bullish retrace. Okay, so another way to look at this, right here. So as you guys can see, it's a very strong, oops, yes, so it's a very aggressive retrace move, which means this, for now, at least now, it's not bearish. Okay, but again, this is not complete, this is not done, it's developing. So it is not fair, there is no technical evidence for call to such things. So let's say I can call a bull break nor a bear break because it's developing, we don't know. Okay, and so just a second, and the same thing is true for the other side. So right here, so we are talking about a 95 to 96 retrace. So it's clear not the same number. We had the almost 80 to 90 to a 95 to 96. So there is a difference. There is a how can I say, the numbers are not the same. When we draw lines here, we will see the deviation from the bottom, so the rejection so far, it's greater than it was for the top. So it's a more soft line here, and here we have a more aggressive line. But again, there is no valid pivot here, so there is no technical evidence. I can even do this, I'm just speculating, but that's what we have for now. Okay, so we are talking about possible scenarios. It is fair to do this. But now let's take a look on that possible behavior that we've been talking about, which is a bullish continuation pattern, because we have odds, it has a bullish DNA. So if we have technical evidence for a bullish DNA, why the hell I would be waiting for a bear break? Not for now. And okay, so again, so this is not even fair, right? The right thing would be something like this. But let's leave it right here. Both are valid. The problem with such a structure like this, we don't want to measure all the tails, all the candles. Most of people do this. They are looking to do this, and they will even argue at you that saying that you are wrong when you are not doing such thing. But the problem is they don't know how to read, to measure, to acknowledge Elliott waves. That's why. So this is the key. This is the secret. Let's say only maybe 4 or 5. No, that's more. Let's say maybe 90%, 80% of people there are aware how to properly use Elliott waves theory. Okay, and the only guys on Twitter who know this, they have low followers, they don't disclose their stuff, they don't teach this in public, and by the same reason I don't do it as well. So let's go for validation. Let's leave it right here. And our speculation right here. So has a bullish DNA, and not only that. So for the macro, there is a bullish DNA. Now let's take a look on what we have inside. So from here, or from here, it's valid as well. Okay, it doesn't happen to be 100% accurate, because we understand the dollar has no symmetry, at least the majority of times, right? And so now, so we talked about this on the macro, and now we're going to talk about this on the micro. So we have the first structure, or the low and the high, the battle of midway, and then the lower section. And what do we have here? So both structures were narrow, okay? But this one is even more aggressive. But of course, we are not going to have the same kind of craziness, volatility that we had back in the day here, 2017, okay? So again, we had the first low, and then a structure, and here the battle of midway, and here right now we have the lower section. So far we have it, okay? And in the Champions Club, we take a look on the dollar every day, every single day. Sometimes not every day, but I make like 3 or 4 private updates every week. And the dollar is a guy that we always talk about. So we have been talking about this higher low from above 89, and after this started to behave in a bearish way, I gave up here, okay? We also understand that this was a possible scenario because it was very aggressive. Take a look here. Okay, so it was possible. I was not confident, but it played out. Okay, no problem. We still have the higher low with validation. And so now we are waiting for a structure to be developed right here, if this is it, for bullish continuation. Otherwise, it is going to bar break or not, we don't know yet, but we have to wait. It is what it is. And back here, just a second. What's this? This is a falling wedge, which is bullish. So what is this? This is a falling wedge, which is bullish. So we have a macro bullish continuation structure, and inside we have bullish continuation patterns. So expecting for a bear break, it's just wild, you know. Now let's take a quick look on the 4. That's already 28 minutes. Whoa. Okay, so since the new low right here, so that's 1, 2, and 3. Inside that big falling wedge, we are having a strong reaction, and now we have to watch how this is going to unfold. Now let's take a look on Bitcoin, and then Ethereum and XRP. So nothing to see here on the monthly. All of you guys are aware of this. Let's take a look here on the weekly. Okay, nothing special. Since my last update on Bitcoin, we made it a target to 28,657. We just made it. We are hanging moving around 28657 for now. You guys just saw it. Let's keep it going. There is not much things to see here. Bitcoin is still going. Okay, so yeah, so this is something that I talked about in my last video in the Champions Club. So that's something to watch. So remember, and also the same things too. So here we have a structure, and then here we have another one, and then here it looks like we are about to develop another one. So this is a rising wedge against a falling wedge in the dollar. So remember the inverted correlation, and also Bitcoin traded against the US dollar. Okay, so if the dollar skyrocket or make that move that we just talked about, it is likely for Bitcoin to go down. So this is not my opinion. These are the facts. And also buying a rising wedge or longing a rising wedge, if you do this 100 times in the long run, you are going to lose 85% of your capital. Okay, so this is just a mathematical fact. Okay, not my opinion as well. So let's take a look on here on the 4. Yes. So this is the guy that we just talked about. Another thing, some people will say, oh, we are bouncing from the line, but they only place such lines after the thing happened, because it's easy, right? After any move, people can toss lines and draw patterns and say, oh, this is happening because of this or because of that. After it happened, it's useless. You can use this information and don't be misled. Okay, nobody throw lines like this into price discovery. Nobody. They will throw the lines after the thing already moved. But again, these kind of lines, they don't behave as support or resistance. And why? The line is just measuring price. And these diagonal lines, they're crossing multiple key levels. That's why price bounce from such levels and continue going. Okay, so anyone who say diagonal lines behave as support or resistance have no idea what they are doing. So this is a different way to look at this rising wedge. And here it is, our key level, the one that I called it out when we were around this range, if I'm not wrong, since the last video. And so my 2 cents here right now. So there is nothing clear here. Okay, we have that rising wedge. That's all we got. Even if we are able to see a strong move here, I strongly believe Bitcoin will come back to 2080,657. I strongly believe. Okay, so can even be something like this, and then we fall below. Then something like this. Okay, that's something close to what I am expecting a possible behavior right here. But right now there is nothing clear. That's price discovery. Just above the arc level. And for now this is it. There is not a lot of things to see here. This is the 4-hour chart. And yeah. Now let's take a look on Ethereum. So 35 minutes long. Let's go, let's go. Let's start from the monthly. Yes, Ethereum is doing great. I remember there was a guy, I don't remember his name, but he was calling out a lot of people, and most of them were wrongdoers. But then he, he changed his focus and started to chase average people, you know. And then he was talking about Ethereum going down to $20 or $30, something like this. So welcome. Uh, okay, so again, same stuff. If you saw my last video on the Ethereum, there is not much to talk about. We were aiming to 987, but in related to Bitcoin, Ethereum is a little shy because there is also a rising wedge as well. And let's take a look at it. So no news here on the weekly. The 3 days, not a big deal. But yeah, some people already asked about this. And something like this. I think I acknowledge this scenario as well. So again, that's a big rising wedge with a marginal bull break. Okay, so we know there is a new meta in the markets because the patterns approach was starting to become very, very popular. And so people were shorting rising wedges and longing falling wedges in a easy way. So the market started to change its behavior around such structures. With what? So here, that's when a lot of people start to place their shorts on top of that rising wedge. And then we end up with the bull break from a bearish structure. And then people just say, okay, there is nothing to do. I already made my move. Let's see how this play out. So basically the idea here is to make a bull break from a structure that showed break bearish. I'm not saying this. That's not what we're talking about. It's a healthy retrace from such a big move. Whatever. But then we end up with this silly bull breaks from bearish patterns. And Bitcoin is doing the same thing for a long period of time. Every time there is a bearish candle or a bearish structure, Bitcoin broke bullish. And so this is a problem because at some point the cry wolf can happen. Okay. So let's jump into the 4. Yes, let's jump to the 4. So this is the previous one. We also called for this bull break. We traded this in 2 times, but then I end up with a stop gain. And I'm not riding this one right here. And I am also looking for regulations and clarity because I think, okay, so I think the first news about it is not going to be great for the top coins. Okay, not on the first days. So, and here we had a weak bull break. We went back inside the previous range for the bull break, so this is not great. That's how bearish structures start to develop with marginal highs. And also that's what gives the footprint of rising wedges. So remember, it doesn't have to be all the way accurate, especially right here, because there is no validation here yet. I mean, there is no valid pivot, so not a big deal. But so, again, we had a bullish structure that broke bullish. Minor bull break, okay? And then it fall back inside the previous bull break structure to then keep going with. So actually they are not marginal highs, right? We're talking about $100 plus move, but still that's not how it should play out. Okay, so we have a rising wedge. This is a fact. It is possible to do another one to full out the bears. Yes, just like we saw on Bitcoin, if I'm not wrong. Yes, but that's what we have for now. Just a quick stop before we look into XRP and folks, XRPX. So I'm not concerned about XRP at all. Okay, so it's because there is always the worst kind of technical analysis. It's around XRP. So a lot of people who have no idea whatsoever they are doing, they are shorting XRP, like the previous one that I shared on Twitter. The guy calling for a downtrend. Well, perhaps it's something new that I never seen before. Wild people, wild people. So we're already talking about this one here. So that's a. So this is a external event or external forces event. So it's not a big deal, right? To say, oh, okay, this is an engulfing candle. Everybody knows what these candles stand for, right? So let's continue. Oh, because it's just dumb. And this is not technical analysis. Again, after things happen and people jump in, it's like a translation. Oh, we are here. Oh, and that. Oh, because we are here. It's worthless. The thing already happened. What we are looking for is two directions to call things in advance with technical evidence. Okay, so this is true technical analysis, not what these folks keep trying to translate price behavior day after day. So they make more money making videos that they have been doing by investing or trying to trade. This is a fact. And how we know it? Based on their broken TA. But yeah, so let's go. So oh yes. Let me bring the good stuff. Oh, there is another thing. Yes, very important. Very, very important. As you guys know, I and we in the Champions Club, we are always looking for what? Every little cent. Every little one. Because things doesn't happen in a chaotic way. Things happens by design. When it comes down to money, there is no random event. There is not such a thing. Okay. So we had a higher high here compared with the previous one. It was a marginal one. Yes. It ended up rejected. Yes. But I see this as a markup. Okay. Because for specific people, this is information. Okay. But for the majority, they are not going to even notice this or care about this. So yes, I believe it is a markup. okay, for later bullish continuation, later after events. We know the the lawsuit stuff, the SEC, and etc. But yeah, so we believe everything is accounted in the charts, okay? And if you guys saw my last video about price protection theory, as after day goes, day after day, it starts to becoming very, very clear that it can be a fact, not a theory, okay? Very interesting stuff. And I'm not saying this because I talked about this. Okay, I am 100% sure there is a lot of other people out there that saw the same thing. Okay, so I'm not special here, not looking to be a guru or whatever. Just a second. Let's try B and C. What? Oh yes. So one at a time. Oh, actually, it's not you. It's you. Yes. So, um, let's go here. So, on the first sell-off, we saw this big rejection from 21. Okay. And the next one, we saw another big rejection from 21 as well. And not only that, let's take a quick look here. It's around 45-50% rejection on top of our key level. And again, folks, you know, this is not support and resistance BS. So let's take a closer look here on the 3 days, because it's still not clear what I want to show you. It's clear on lower time frames. We are going to jump into it. So here we can see the rejection is even bigger from our key level. And in other words, in clear English, this is a big no or get out. Okay, it's something we can read as this as well. So the first one here, then the one inside that end up all the way covered, and then the big rejection, big no from 21 cents, just a little below the previous bull break range, that the one we talked about, the price protection theory. Now let's go into the daily. It won't be clear here. So we already have okay, so we are going to have the new one in 4 hours. Okay, so yeah, so soon we are going to have the new year. Just a second, folks, because maybe some of you guys will be saying, oh, okay, we close at above and this is bullish. The kind of behavior that we look for is this. That's why we don't look for support or resistance. We don't look at it. That's not how we look at it. As you guys can see here. But then we had the bearish news around here, if I'm not wrong. But yeah. So now let's go into the 4, because here on the 4, that's where the magic begins. You guys remember the dollar with multiple falling wedges? Just for you guys to see and understand what I'm going to do next. very, very narrow. And here we are not trying to acknowledge. So here it is, folks. So this is a falling wedge. Okay. Uh, the guys who throw lines all over, toss lines, but don't know how to read patterns, what they are going to say. So how I know this in advance? Okay. They are going to say, okay, so XRP is about to bull break. Or they are going to say, if XRP moves above this line, it's a bull break. So that is not a fact. That's not how it works, because this line is not a resistance or support level. What happens here is I'm going to show you. Hold your hat and cool your jets just for a second. So we have the first structure. By a matter of fact, it is a structure right here. We have the low, the high. Then we have the battle of midway with a low and a high. And then we have what? A structure, just like it is. So it's basically a falling wedge and rising wedge DNA. That's how we break this thing down. Sometimes they are crystal clear, sometimes they are not so clear. Sometimes we enter a little early, sometimes we miss. They are not always perfect, they are not always fully symmetrical. Okay. Yeah. And so now what's happening right here? Let's take a look. So right now, as you guys can see, XRP, it's above my key level, which is 21. And let's take a closer look to understand, because here on the 4 is not crystal clear. But let's jump into the 2 hours. Oh. So here we have the previous high, and here we have the low. So this is a higher high, which gives us odds for bullish continuation. Okay. And not only that, here we have a bullish continuation pattern. So, is this going to bull break? If we are basing the price behavior only in the charts, I would say 100% yes. This can be a bull trap? Yes, it can, but is somewhat unlikely. Somewhat, but it's still possible. There is nothing outside the charts that we don't know. Not today. So for example, Coinbase saying they are going to halt, if they already did it, halted XRP trade, and a few others saying they are going to delist. So Binance US. So think about this. Kraken, it's a big deal. Kraken have a bank license, and someone said that Uphold have it too. Great. Binance US is going to delist XRP, but the big ones are not going to even halt trade. Remember, Binance, Bitfinex, Tether, OKX, and etc, etc, etc. They are all together on this. Okay, and we can also see that the news behind those guys are moving on the same way. Okay, so they have no reason to do it, so why they are doing it? Yeah, so whatever. So again, folks, this is a bullish, micro bullish continuation pattern inside a much bigger bullish continuation pattern. And also above our key level. Okay, and just for you guys to have an idea, Why? People who still use moving average have no idea what they're talking about or even what they are doing. Let's take a look here. Moving, oops, moving average, 55 minutes already. Hold on. So the guy was using a 50 days, if I'm not wrong. Let's use a red. Okay. By the picture, he was below 4 for a mirror. Okay, so here it is. And so that's interesting because they only say, oh, we have support here. Why are the things above? Why the thing breaks below or stay below? Oh, you know, oh yes, it can happen or not. Well, or oh no, it just became a resistance. So they keep changing because they have no idea what they are doing. So now you tell me. Now you tell me. XRP found support on top of the moving average, or XRP found support on top of a key level. So again, let's take another look here. That's the higher low, higher low, higher low. All of them chasing what? Chasing the average price on top of the key level. So this is not 100% about this. Okay, this is just like, let's say, 5-10% about this. This is just a way to visualize and understand what is happening. Okay, this is not something that you can grab into it. Oh, okay, this is it, you know, whatever. That's not how it works. But again, the thing is based on perpetual levels, perpetual places, let's say places, not based on support and resistance, moving average, whatever, things that are going to turn back and forth as long as you change your time frame. So that's not how it works. Okay. Yeah. So what we can do for now is wait for the bull break here. Of course, there are other fundamentals involved that we don't have control. Okay, for example, Bitcoin, the dollar, gold, etc., news, and yeah. Okay, so that's what we can do for now. So folks, we are about to enter the new year. Oh, sorry. Just a second, please. I wish you guys, you, your family, your loved ones, your friends, a happy new year. I really hope this new year it's going to be 100,000% better than 2020 was. And always remember, we are always looking for better things, but we have to be grateful for everything that we have, everything that happened, because we must be grateful. Okay, so we can breathe, we can walk, we can sleep, we can think, we can see, we can hear, we can taste, we have legs, we have hands, we are healthy. There's a lot of other people who can't say the same thing or who can do the same thing. So we must stop complaining about everything, being harsh, you know, being toxic. We have to be grateful, we have to be happy, we have to do things aiming good things, good stuff, you know. So before asking for a better year, let's stop for a second and be grateful for everything that we have, everything that we accomplished, everything that we learned, everything that we are able to learn, to do, to improve, or even the mistakes that teach us how to be better, how to do better things. Okay, so and yeah, so I wish you guys all the best. Okay, and don't drink too much, don't overcharge, don't overwork. Spend time with your friends, with your family, with your kids, with your dog, with your cats, your birds, whatever. Have a good time with everybody. Just forget this for a while. After I end this video, I am going to rest a little and have some fun. And yeah, so again, folks, I wish you all the best. Stay safe, stay well, not wall. And thanks for everything. This was an amazing year. We accomplished amazing stuff, amazing things. So thanks for your time, thanks for your patience, thanks for your support as well. In January 15, the Champions Club will make the happy birthday. It's going to be 1 year, and yeah, amazing news. So folks, this is it. I will see you guys soon. Thanks for everything, and don't forget to smash the like button. This is the last video of 2020. Okay, so yes, thanks for everything, and also thanks for all the times you guys smashed the like button. I'm very thankful. And yeah, this is it. I will see you guys soon, but in 2021. See ya.